All right, let's talk about something that is buzzing all over the internet, de-dollarization. It's this idea that the US dollar is on the verge of collapsing, and frankly, it's surrounded by a ton of scary headlines. So today, we're going to cut right through that noise.
I mean, you've seen it, right? It feels like you can't scroll for 2 minutes without seeing some new video proclaiming the end of the dollar's reign. It's a really powerful and, let's be honest, a kind of terrifying story. So that's what we're here to do. We're going to push aside all the hype, all the speculation, and ask a really simple question. What do the actual numbers say? What is really going on with the world's most important currency? Okay, so let's start by digging into the hype itself. To be fair, you have to understand the case for de-dollarization. Why are so many people so convinced the dollar is on its last legs? And you know what? When you first hear them, the arguments sound pretty convincing. It really comes down to three big ideas. First up, you've got sanctions. Whenever the US weaponizes the dollar to punish countries, well, it makes other nations pretty nervous. It gives them a huge incentive to find another way. Second, there's the US national debt. It's huge, and that makes a lot of people wonder about the dollar's long-term health. And finally, you have new technology like digital currencies, which could, at least in theory, let people build a whole new financial system that just goes around the dollar completely. But before we can really put that hype to the test, we gotta take a step back. We need to understand how the dollar became the undisputed king of the hill in the first place. This wasn't some accident. It was a system that was carefully built over decades. So this whole story really kicks off way back in 1944 with the Bretton Woods Agreement. This basically made the dollar the center of the universe, pegging it to gold. Now, even when the US broke that link to gold in '71, the world was already hooked. The system was already built. And then, in 1973, they played an absolute masterstroke, the petrodollar system. They made sure that the world's most important commodity, oil, was priced and sold in US dollars. Think about that. If you wanted to buy energy to power your country, you needed dollars. End of story. And this whole system is held up by four enormous pillars. One, it's the world's reserve currency. Two, it's the default language for global trade. Three, US financial markets are basically the world's deepest, safest piggy bank. It's the best place to park your money. And four, and this one is crucial, trust. People trust that US institutions and the rule of law will protect their assets. To knock the dollar off its throne, a challenger would have to replace all four of those pillars, and that is an incredibly tall order. All right, we've got the hype and we understand the foundation. Now for the main event. Let's really tune out those scary headlines for a minute and just look at the cold, hard numbers. What does the math actually tell us? Okay, let's start with the big one. How much cash other countries are holding in their vaults? And you know, the critics, they have a point here. The dollar's share has dropped from over 70% back in 2000 to around 59% today. That's a real shift. But look at the competition. The dollar still absolutely dwarfs the euro. And the Chinese Yuan, the currency we hear so much about, it's sitting at less than 3% of global reserves. So yeah, it's a dip, but it's hardly a dethroning. But okay, what about actual trade? When people are buying and selling stuff across borders, what money are they actually using? Well, according to the SWIFT system, the dollar is used in almost half of all global payments. And the yuan? Even with China being the world's factory, its currency is only used in about 4% of transactions. That tells you something really important. Just because you have a huge economy, that doesn't automatically make your currency the world's favorite. And now, for what is, to me, the most mind-blowing number of them all. 88%. According to the Bank for International Settlements, the US dollar is on one side of 88% of all foreign exchange trades on the planet. Just think about that for a second. To get from almost any currency to any other, you usually have to go through the dollar first. It's not just another currency. It's the operating system for the entire global financial world. So this all begs a pretty obvious question, right? If there's so much motivation for countries to find an alternative to the dollar, why are the numbers still so incredibly one-sided? Well, the answer is that the barriers to entry for any challenger are just immense. Let's just take the biggest supposed challenger, the Chinese yuan. The fundamental problem comes down to trust. China has strict capital controls, meaning you can't always get your money out when you want to. Their markets aren't very transparent. And maybe most importantly, the rule of law is controlled by the state. In the US, your assets are protected by the law, not by whoever's in charge that day.
Without that absolute bedrock of trust, you just can't become the world's safe haven currency. It's impossible.
And this all feeds into one of the most powerful forces in the universe, the network effect. You can think of the dollar as the Facebook of money. Why is everybody on it? Well, because everybody else is on it. That massive user base makes it the cheapest, fastest, and most reliable way to do business. A country trying to switch to another currency would be like you trying to convince all your friends and family to leave Instagram for some tiny new app. It's just not going to happen easily.
So when you put all of this together, what does the future actually look like? Well, if a sudden, dramatic collapse is pretty much off the table, what should we expect to see instead? The data doesn't point to a revolution. It points to a slow, steady evolution.
What most experts think is the most likely outcome is something called a multipolar currency system. So in this future, the dollar is still number one. It's still the global anchor. But other currencies like the euro in Europe and the yuan in Asia start to get a lot stronger in their own backyards. It's not about countries abandoning the dollar. It's about them diversifying their savings. And that's not a rebellion. That's just a smart financial move.
So if we look at all the evidence, we can really map out three possible futures. By far, the most likely scenario is just continued dominance, a slow, gradual erosion of its market share over many, many decades. That's a real possibility, but a sudden collapse, that is highly, highly improbable. For that to happen, you would need a complete internal meltdown of the US economy and political system, something so catastrophic it would probably take the rest of the world down with it.
So the mathematical truth is pretty clear. The US dollar is not dying, but the story isn't over. And here's the real paradox we're left with. The very things that make the dollar so powerful, like the ability to impose sanctions, are the exact same things pushing other countries to build alternatives. So the real question isn't, will the dollar collapse? It's, is the dollar's own dominance slowly creating the very rivals that will one day eventually share its stage? Thanks for joining me on this one.